Hey guys, Stock Saturday, and it's rather volatile times at the moment. I've had another fairly red week, down about 24,000, about 7%. It was worse during the week, but has slightly come back. It's mostly on the gold and crypto side again, despite the sort of market performing relatively well. I believe, unless we get sort of a fairly big change. The crypto side should be up tomorrow, and the stocks are down. So, don't know, waiting for the election maybe, which I'll come back to in a bit. But yeah, sort of TSMC slightly down on the week. Broadcom similarly have made a change. Sort of waiting for the China stimulus, and sort of things were looking up a little, and people are sort of getting excited about the next announcement. But that is sort of later next week, so it's after the election. And I thought, sort of with things looking up, I kind of wanted some dry powder for election day. So I sold about half of my remaining process, so had about 12,000 in it. Come down to 10,000, and I now sold half that and put it over to interactive brokers. Whether this is the right thing to do, it's sort of not been going super well this week at least, but I still think it's looking good for the next year. So yeah, that was sold. And just comparing to the markets, so the S&P is down 1.8%, so I'm a fair bit worse than that, but that is fairly normal. Sort of obviously outperformed last week, so yeah, that's just what happens. Nasdaq up on the Friday, but it's down 2.06% for the week. So yeah, we've had some sort of not the best earnings from some of the tech companies. Sort of Amazon looking quite good, but the rest sort of yeah underperforming a little from the looks of it. So yeah, let's have a look at some other news. So we had Stellantis Q3 shipments and revenues. It's not full earnings. They're a twice yearly earnings company, but they do give you a sort of interim update of sorts with revenue and shipment numbers, and that sort of gives you a reasonable idea of earnings for the quarter. And yeah, combined shipments down 21%. They did sort of, warn of this, so people were expecting bad. That's why it sort of hasn't really dropped on this news. It dropped on that announcement a little while ago. Um, Shipments, yeah, consolidated shipments down 20% and net revenue down 27%. So obviously some of those cars are the more expensive, higher margin cars. Year to date, it's sort of not quite as bad, but still pretty bad. 15% on shipments and 18% on revenues. So yeah, it's not looking ideal. They're saying that's sort of down to reduced revenue is down to reduced volume and reduced mix. So selling more of the slightly cheaper cars than more expensive, and yeah, net price as well. So maybe a bit of discounting going on. This is sort of quite a lot from North America. So you've seen shipments come down from 470,000 to 299 from Q3 last year, and revenue from 21 billion to 12 billion. Europe, not quite so bad. 599,000 shipments down to 496, and revenue not down too much at all. So yeah, not too bad. Middle East and Africa looking sort of similar, sort of in between the two, really. Revenue down a reasonable amount. South America is fairly flat. They sort of had some flooding issues, and that was last year. So, yeah, the shipments are up, revenue slightly down. China, yeah, not been doing sort of particularly well in China. So, yeah, 37,000 down to 14,000 shipments, revenue down quite a bit. I'm not expecting much from China, to be honest, other than their joint venture maybe with Leap Motor. And yeah, Maserati down a fair bit. They're saying they expected this due to sort of reduction in the portfolio. They are highlighting inventory coming down sort of slowly, not maybe quite as quick as some would have hoped. And they've had the company revenue actually increased this quarter, but independent dealers has come down a little bit more than that. So overall, it is down. US dealer inventory in sort of month by month. They're saying October has been a fairly good month, so they wanted to highlight that past Q3. And yeah, US market share sort of stabilized in July and has been slightly looking up. Sort of highlighting their joint venture, as I say, with Leap Motor, began shipping in Europe in September. You could see this as good, but it's also going to be sort of cannibalizing some of their existing revenue, I would imagine. Launching in India and Asia Pacific, Middle East and Africa in Q4, and South America in sometime next year. So yeah, going worldwide, which they don't have a huge position in all of these areas. So it's potential to eat into other companies' market share. And they're looking for 500,000 joint venture sales per year by 2030. So they are looking for a fairly lofty target. Obviously, Stellantis as a whole are sort of looking at 6 million sales per year. Yes, and they gave around this guidance in September, and they've sort of reaffirmed this adjusted operating income margin, which is a lot higher than net margin, of course, 5.5% to 7%, which isn't great. They've always sort of been going for double digits, hopefully mid double digits, so that's not a great number. And industrial free cash flow negative. So yeah, reflects the significantly suppressed operating income, as well as the sizable impact of elevated working capital. So yeah, not great. Obviously dropped on this news in September, and this is sort of confirmation, but they're saying they have a path forward, and yeah, it's I don't think it's worth sort of selling at this point. I still think they've got plenty of potential, huge amount of cash in the bank, obviously, to implement if they feel they need to expand, and yeah, we'll just see how things go. So we did have an earnings release. We had the Q3 Riot Platforms results. I sort of think these are not quite as important as, it's sort of largely updating details that we've already known. This is sort of up to September, and we got the September news. So yeah, it's reiterating the hash rate that they were up to in September, and sort of Bitcoin on the balance sheet and all that sort of thing. Financial results. I never think financial results, for the most part, is too important. Net profit and that sort of thing is enormously impacted by Bitcoin on the balance sheet, which they have quite a lot of. But I will feed these numbers into my model at some point. The numbers that I think are applicable, your sort of cost of goods and G&A. Hash rate growth, they've sort of highlighted as a little bit worse than September, which isn't particularly good. Sort of looking at this graph, they've got 34.9 exahash by the end of the year now, where they had 36.3, and it sort of only gets worse from there, really. 43.5 they had for second half of next year. They've now got 38, and sort of still at 38 in Q3. They sort of had going to 56 exahash, where they're now saying 46.7. So down 10 exahash for the whole of next year. That's, I guess, what has whacked the stock on that day at least. And still at the market offerings, which is not ideal. 750 million in shares. People don't really want that when you've got sort of lower hash rate growth. They highlight here, during the 9 months up to September, they have sold 730 million in new shares, 70 million shares, and subsequent to September the 30th to October the 28th, they've sold 62 million of shares. That's 8 million shares. And they now have 332 million, which is a lot above my model, but they have bought block mining, so that was to get the yellow bits here. So you could say it's worth some dilution, but they are doing a hell of a lot of dilution. That is partly, I guess, to not be selling a lot of Bitcoin. They sort of are up to, what is it, 10,700 Bitcoin now. So yeah, it's not ideal, and I'm sort of waiting for what we hope is a reasonably good bull market, and then I expect I will be out of Bitcoin miners entirely, because I don't think long term they really are positive. As I sort of mentioned before, energy companies around the world and countries themselves mining who sort of care a little bit less about energy cost and are maybe sort of willing to run it at break even, maybe even a small loss if energy prices are fluctuating. So yeah, I don't think the public miners are in the strongest position to be mining compared to some others, but we'll see. So I do think an awful lot of my portfolio is kind of hinging on the US election, even sort of gold and silver. I believe is now sort of moving somewhat with the election as well. You've got obviously Donald Trump, sort of very much different attitude towards Russia and China. So yeah, people are sort of maybe protecting themselves, sort of thinking got tariffs and that sort of thing coming. So yeah, the election hinges on that, and certainly on the crypto side, obviously you've got Donald Trump being super pro crypto. Even sort of tweeted out yesterday, I believe, sort of saying, they want Bitcoin mined in the US, and it's vote for him if you're into crypto at all. Which, yeah, never thought we would hear coming from a presidential candidate, least of all Trump. 4 years ago he was saying it was not a scam, but it was the I like the dollar. I think the dollar is everything. But I didn't think a few weeks ago that this is quite how they did the elections. I'd sort of heard of mail-in and I hadn't heard of early in-person voting. I thought you could just sort of post in your vote, but it seems like a sort of drop in whenever you like voting system, basically. They sort of, I think, expecting about 150 million, 160, 170 maybe million votes, and 66 million have already voted. And they're sort of releasing the numbers, which kind of think could skew the election, really. Sort of people are, one party's up in your state, and you maybe sort of think, well, maybe I don't need to vote now if it's sort of nearly done. And yeah, that's not really fair, I wouldn't have thought, but this is the way they do it. So 66 million have already voted. They sort of put it down to battleground states, as they always say. You've got some, that are fairly safe, they would think. Somewhere like Utah, 53% Republican in the early voting. They don't expect them to change. Wyoming, 78% Republican. And then your sort of usual California, Trump's never going to win California, of course, or New York, or some of the others. So you can flick on to battleground states, and they think basically these 7 are going to be the ones that swing the election. So you've got Arizona and Nevada at the moment in the early voting, sort of swinging Republican. North Carolina, Republican ahead by 1%, but it literally is 34, 33, 33. Georgia, Republicans ahead. And then Pennsylvania, Michigan, and Wisconsin actually at 41% other. I don't know whether this is RFK, Robert Kennedy. He's pulled out and he's sort of supporting Trump, but it seems people are still voting for him, either him or someone else. Not quite sure what that is all about. He's come out and said, "Don't vote for me." But if anyone knows a little bit more, then do let me know. So that's NBC's data, and interestingly, they have a little road to 270. You need 270 electoral college votes to win, and they sort of have this, little map, interactive map where you can change states, and they give you a projected result. And if you take the sort of early voting and the non battleground states as red, and you sort of put in the battleground states as the current votes. Although I did put Wisconsin over to the Democrats, because I can't imagine people are sort of not voting Republican or Democrat in there. So I put that over to Democrat, and you get 269 each. A dead draw. So that would be interesting if that does work out that way. They're sort of expecting it to be contested either way. If Harris wins, they're going to call it voter fraud and sort of mail-in voter fraud. And you've seen sort of, videos on TikTok and that sort of thing of these mail-in ballot post boxes getting set on fire and all sorts. Yeah, not sure about that. And obviously, if Trump wins, there is talks that they will sort of bring up the court case again and, say that he's not even fit to run, which you sort of think, you've let him run until the day of the vote, and to then say he's not fit to run, that's, not really a strong argument. So kind of seems like trying to have your cake and eat it, have a sort of what you would call a fair vote, and then if he wins, say it's not a fair vote and he shouldn't even be in it. But there you go. Looking at the betting odds as well, it's still quite heavily on Trump. They don't really see it the way the polls do. You got Donald Trump 8-13. It's been a lot lower than that. It's below sort of 1-2 during sort of early this week, and Kamala Harris sort of was going out quite long odds, quite unlikely. But I do sort of think it's good to remember the betting markets certainly don't always have a good handle on it. They had sort of Donald Trump at about 6-1 in the 2016 election. So yeah, take it with a pinch of salt maybe. So, economic news. It was a fairly big week, and we've had some sort of very differing news. You had JOLTS job openings in the US, sort of a fair bit lower than expected, and GDP, the sort of up-to-date GDP figures from Atlanta, 2.8%. Not official, but that's sort of the ongoing one that they keep updating every other day. Provisional GDP data for the EU. They always come out with this pretty early, and it was a very slight beat. Not exactly, massive GDP growth, not even 1%. ADP non-farm employment was a huge beat, but we'll come back to that in a second. US GDP, again, provisional for Q3, 2.8%, slightly worse than 3% expected. And yeah, then we had EU inflation. They always come out with this extremely fast, actually on the last day. So, provisional. Again, slightly higher than expected, 2.7% on core, but everyone seems fairly happy with under 3% inflation, to be honest, sort of focusing on other things. Similarly with the US, 2.7%. Everyone's at 2.7%. On core PCE, that's the one the Fed sort of seem to like to use. And jobless claims, again, slightly better than expected, 216,000 initial jobless claims. And yeah, looking at Friday, the big non-farm payrolls number. So you had ADP with an enormous beat, 233,000 new jobs. And then the employment survey, the establishment survey, comes out with a heavy miss, 12,000 new jobs compared to 223,000, and that was revised down from 254. So they were expecting a drop to 106, sort of slow and steady, and he got 12. Participation rate down as well. Some of this 12 is even government by the looks of it, because private was negative for the first time in a very long while, expected to be 90. And again, last month's revised down from 223 to 192. So not great at all. And then some ISM numbers slightly lower than expected, and GDP now for Q4 at 2.3%. So this didn't seem to go down particularly well either. So yeah, starting to slow down maybe in the US, but a lot of people are saying slow but not negative growth is probably the best for gold and possibly the stock market, possibly Bitcoin. Like if this carries on sort of, slow but not negative, then it's not a recession, but we need to pump growth. So there's potential for sort of QE, but not the huge job losses that would come with a recession. So yeah, potentially ideal. And just looking at the portfolio, so it seems Friday seems to be rough every week. Always sort of got a fairly red wall down here. Riot up 2.16% on the day, but I think that's just rebounding from having a rough earnings release. Everything else is sort of fairly down, and obviously Riot is a fair bit down on the week. Yeah, gold and silver sort of performing similarly badly. I've not made any changes. Still got my American Tower, which has sort of had a little bit of a rough week. I have to dig into the earnings and see what's what. And yeah, the Interactive Brokers side, sort of similarly, Pan American and KGHM both sort of down a little, nothing too much. And yeah, on the option side, it's sort of swinging about all over the place. I think this was about 108 last week. Did go to 122 early in the week, and that was without the 5,000 that I've just put in. It's not actually in there yet, but should be on Monday. And yeah, sort of Hive coming down a fair bit. Equinox, sort of certainly the end of next year, $10 Equinox bets are starting to look a little bit sort of less likely. It might need another year. So I've been adding a fair bit to the January 2027 call options to give me sort of all of 2026. They're sort of hoping for like $1 billion of EBITDA in next year and 2026. So I think it's giving me a good bit of time there. I think all hopes of end of or January, this coming January, $10 is basically gone now. So those options that I bought are probably going to be worthless. I don't think it's worth selling now, but yeah, those are probably gone. So options is something that you can have your position completely go to zero. That is the risk. It's nothing like sort of holding the stock. You would just hold on until another year, whereas these do go to zero, but you potentially get the upside. So yeah, Riot sort of sitting at about 21 now. That is sort of doing reasonably well, I think. Still in profit. And and I sold another 3 contracts of Kerr mining. Just sort of wanting to buy a little bit more Equinox. Kerr still sort of has come down a fair bit, but still sort of well in profit. And I think Equinox has much more potential upside. And yeah, IMAX down a little, Fortuna down a little, but I got my dry powder to potentially deploy on election day and sort of in the few days afterwards. So we'll see what happens. Let me know what you guys are up to, if you're buying anything and or taking profit on anything. Maybe looking forward to the China stimulus. And like and subscribe. See you soon.